So hi everyone, my name is Michael from Lux Trading. Today we're going to talk about some topics which I think is going to interest a lot of stock traders, and we're going to discuss basically what the difference between cash stocks and CFDs are, what is the role of a liquidity provider, and the spreads between large caps and small caps, and obviously a little bit of our rules of engagement when trading in the stock market. So let's just get right into it. So cash stocks versus CFDs. There's like really two differences. One of the main top differences is that a cash stock, basically a cash account, is basically you're literally trading with your own equity. So let's say that you put $10,000 into a broker account. That's the max buying power that you will be able to have. You'll be able to only invest or trade with $10,000. On the other hand, a CFD account will let you trade with leverage, with a margin account. And therefore, depending on the broker, if it gives you 10 to 1, 50 to 1, 100 to 1, that's the buying power that you can buy the amount of shares. On the second difference will be that basically a cash account normally only lets you go long in a position. So buy at a certain price and sell higher to make a profit. On a CFD account, you can actually trade both directions, long and short. So now we're going to speak about the role of the liquidity providers. A liquidity providers, by definition, is a market broker or financial institution, which behaves as a market maker, in a chosen asset class. Market makers have a very important role in providing liquidity. And so they will put up bids and asks, and they're making money between the transaction of that bid and that ask. So generally making money on the spreads. Again, this is very important to understand because many times you will see small cap stocks that have very wide spreads, especially on ones that are a lot less liquid. And this is a way for the market makers to profit on lower liquidity stocks or a lower liquidity market by having wider spreads. So when you go buy on the ask and sell on the bid, you're losing money, but the market maker is making money. This is important to know because when small caps are less liquid, you should essentially, one, not trade that stock, or two, wait for the bids to show some strengths and therefore the spreads getting tighter. And that's when you can start looking into taking a trade. This is why it's very risky to trade pre-market and after hours as liquidity providers exit the markets and therefore the spreads widen up and can cause big losses. So now we're going to discuss a little bit about the rules of engagement and the trading hours for stock traders. So in the interest of ensuring safe and transparent trading for all our stock traders, we have instituted the following guidelines related to trading hours. So one, all stock trades can be executed only during regular market hours. Trading during pre-market and after-hour sessions is strictly prohibited. To protect trades from potential price manipulation and larger spreads caused by the departure of liquidity providers towards the end of the trading day, no stock trades will be permitted during the last 5 minutes leading up to the market close. So basically, our deadline for intraday trading is at 3:55 p.m. Eastern Time. Small cap stocks should not be held overnight. Due to the large widening of spreads experienced when the market opens and before the liquidity provider gets it, those positions might get stopped out of the ordinary fills. If you do hold these positions overnight, there is no guarantee that this will not happen, and no refunds will be given for losses out of such positions. On live accounts, it is strictly forbidden to hold small cap positions overnight. Doing so may lead to cancellation of your account. The only stocks that will let hold overnight positions is basically the stocks that are under the SP 500 and the NASDAQ 100. So everyone, I hope this has been valuable information. I hope you take the like button, subscribe to the channel, and I hope to see you all next time. Take care.